Hey guys, welcome to the third episode of this series. Today we're going to be talking about Forex market hours. In simple, let me summarize the most beneficial thing you would receive from understanding the Forex market hours. Think of it this way. You've gotten into Forex, you've got a taste of what it actually is, you're pumped up, you're ready to hit the tracks and start making some gains. The moment you step in, you start to realize that things aren't fluctuating the way you want them to. Hell, they might even be unstable. They might go up 100 points, either go down like 10 points or up 20 points for like the next 5 hours. That is the effect of the market time zones. So, up until now, we know that several countries across the world participate in Forex, and because there are so many nations involved, Forex remains open for 20 hours a day, 5 days a week. But the question is, how can it operate for that long? How does it stay up for 24 hours a day? Well, the day is broken down into four markets. You have the Sydney session, the Tokyo session, the London session, and the New York session. A quick note before we start, you should know that the market hours and the exact time to trade in is mostly important for people who tend to day trade, as in execute multiple trades a day. If you're going for a long-term trade, that could possibly have your position being held for 3 weeks, 2 weeks, a month, a year, and so on, such factors would impact your results. So, when exactly is the right time to trade? The simple answer is when the market is most active. And by that I mean when the market has the most volumes of trades going in. So, let's take a step back and start by describing the time zones. Now, while each time zone session functions as an independent market, they all trade the same currencies. The difference is the volatility of each session forced by the impact of trading activity. Let's start off with Sydney session. Sydney is more of a minor session between all four, which is really not looked at a lot. But what you should know is that it's the first to open throughout the whole week. You'll see a lot of fluctuations in price levels within the first few hours of the week. That's due to many players deciding on positions and gathering thoughts after the long weekend wait. But throughout the week, the Sydney session would have a fairly low amount of market volatility, and that is why it's known to be a minor session. Now let's get into the more exciting part, which is the reason you are here. The three major Forex sessions, which is also known as the Forex three-session system, where price fluctuations are at its peak throughout the day, which are the Asian, European, American sessions, also known as Tokyo, London, and New York session. Now, an overlap would occur twice between two of the three sessions, where both markets would be open at the same time. We would have an overlap between Tokyo, London at 3 to 4 a.m., and another overlap between London and New York at 8 a.m. to 12 p.m., both of them being Eastern time, of course. Now, you could guess that such an overlap would provide very high fluctuations due to all the businesses in all three of the markets exchanging currencies heavily in order to conduct business inquiries and transactions. So, let's take a look at an example of the Euro USD currency pair stating the volumes traded in an overlap. In this image, I've created some boxes that would help show you which session was live during the markets. Green being Sydney, yellow being Tokyo, red being London, blue being New York. Now, under the candlestick charts, the lines that you see on the picture, you'd see some bars. Those bars typically show the average volumes traded for each candlestick. Now, green meaning it ended or closed above its opening price, while red indicates below the opening price. But the point here is the amount. I highlighted the overlaps between the session in white. The first layer is the overlap between Tokyo and London, which is where the price initially peaked. After the overlap ended, the price still rose, but the volumes traded were lower. Entering the overlap between London and New York, the volumes peaked even higher and eventually died down and started consolidating while reaching the end of the New York session. So we got a sense of what the overlaps could do to price fluctuations, but each session mainly affects certain currencies. So let's start off by breaking it down and heading deeper into each session. The Tokyo session. The start of the Tokyo session is at 7 p.m. Eastern Time and is traded until 4 a.m. Eastern Time. As yen is the currency of Japan and it being the third most traded currency, only 16.50% of all the yen transactions take place during this time. And as far as all the currency transactions traded in Forex, the value lies at 21%, being traded throughout the Tokyo session. Now, let's look at the image that shows the average pip movement throughout the Tokyo session. When compared to the London and New York session, the Tokyo session has usually the lowest amount of average pip movement, which in this case is 53. Now, keep in mind, this table is just an approximation of the data, and the source is actually babypips.com, if you guys would like to check them out. So, when it comes to trading in the Tokyo session, it's really known for its low liquidity, but such an impact can result in a consolidation which could be of no help to technical traders who are looking for a huge movement to grab profits. But in such a case, it could be potentially beneficial to scalpers who base their gains on multiple small movements. Don't be mistaken though, Tokyo sessions are as important as the rest. Around the end of the session, you could potentially see that a certain path has been set for currencies, leading to a potential breakout in the upcoming sessions. And we wouldn't want to miss that, right? So, as we've stated before, every session impacts certain currencies in a way. So, when it comes to trading in the Tokyo session, we should keep an eye out for news that come from countries like Australia, New Zealand, China, and Japan. The news usually pumps up the volatility and liquidity of the market, of course. So one can focus on the Australian dollar, the New Zealand dollar, and the Japanese yen pairs. Now, at the end of this session, we've mentioned that an overlap between Tokyo and London occur. In such a state, when the London market opens, it would be wise to look at currencies such as the pound, the euro, and the Swiss franc, along with others mentioned before. So, the London session, which is also referred to the European session, is a session where a significantly high amount of trading happens. The session starts at 3 a.m. to 12 p.m. Eastern Time. Now, London typically has a lot of huge financial institutions, which could cause huge amounts of trading volume, since thousands and thousands of traders are taking decisions and executing trades every minute throughout the session, which could lead up to almost 43% of all Forex transactions taken. That makes the London session the Forex capital of the world. So let's be quick and take a look at the average pip movement in the image shown. We saw that the average movement in the Tokyo session was 53. Now looking at the London session, the pip movement was at 72. That's due to the market makers and huge institutions taking decisions in the Forex market. Now, we've mentioned in the Tokyo session a consolidation occurs until the overlap between the two sessions starts. In such a time, the consolidation starts to fade to reveal a direction of where the price would move. Upon London session taking over the Forex market, the price would take its direction and move according to its trend. But notice the slowdown in the volume traded in the previous chart between the overlaps of Tokyo London and London New York. That occurs due to players taking a breather, taking a break while waiting for the New York markets to open. It's also known that trends could reverse upon reaching the end of the London session. That would be the cause of European traders closing their positions and capturing their profits. It's a really good note to keep in mind. So, what kind of currency should we focus on in the London session? In such a session, volatility is at its peak. There is enough liquidity to go around, so looking at all the major and minor pairs would be enough. Now, the New York session, also known as the North American session, which opens at 8 a.m. Eastern Time exactly 5 hours before the London session comes to an end. We all know how fairly busy the financial center of New York is, so we can say that liquidity during this session is also pretty high. So let's just jump ahead and look at the table that states the average big movement. Since such a great overlap occurs, two of the largest markets are being traded in the forex market at once. So you can expect a high volume of orders flowing into the market. And such time is crucial to be in. A lot of movement occurs, and we wouldn't want to miss such opportunities. So when it comes to trading in the New York session, almost 85% of news begin to drop, and you can take a guess, of course. They're all related to the US dollar. Since the news typically moves the market drastically, traders should keep a close watch on all the US dollar pairs as well as the major currency pairs. Once the overlap reaches its end, which is in the afternoon of the New York session, the market volatility begins to drop, which tend to result in a move of a consolidation phase. That is the reason trading at the end of the session is not usually recommended. So in the end, it's just up to you to decide which currency pair to focus on and what time to do so. In the, in the end, it's up to you to decide which currency pair to focus on and what time to do so. It's not really relevant to trade the, this. So it's really up to you to decide which currency pair to focus on and what time to do so. You'd notice in the previous examples that the average big movement in the London session is at its peak, and it's way better to trade in while trading in the Tokyo or the New York session. But keep in mind, some currencies would move even greater while being in the Tokyo session and not in the New York session. You get my point. So in the end, trading pairs that won't fluctuate won't help create you any gains. And honestly, that's the reason why you should always understand the forex market hours and the best time to trade. But keep in mind, having a 24-hour time frame to trade in can be a hazard and also an advantage. These additional hours increase the risk factor intensely for those of us who are human and obviously can monitor our investments 24 hours a day. This means that the value of your holdings could potentially plummet overnight while you sleep because other countries are still trading